The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, we saw on Wednesday that the Federal Reserve wrapped up their December meeting and they held interest rates steady, but also they made some interesting comments that we definitely need to dive into here on the show today. Also, a down day in the grain and oilseed trade. Got that news out of Argentina that we want to discuss with their new president taking over and taking office. A lot to get to here today, helping us make sense of it. We welcome in Tommy Grisafi from Advanced Trading at ATI Pro Media. Tommy, good to have you back on Market Talk. Thanks for joining us. And hey, it's Fed Day, Tommy. That's
It's
always
Fed
fun,
Day.
right?
I'm glad we waited a few minutes to record. Now, there wasn't a secret that they might not do anything, and they didn't do anything. But the statement that already came out made the stock market explode. Explode, that's so dramatic. It made the stock market continue to go up. But yields collapsed. The 10-year yield dropped 12/100ths, 4.08, the lowest we've been for a long time. And that's really great news, especially for anyone trying to refi a house or buy anything. It's great news for our folks in ag land. I mean, think of the beating that cattle took and all the money it takes to produce beef or pork or a crop, as you know. We thought, and you and I had talked on a few shows before, we said, oh, the operating notes might be 10% next year. They're coming down, 9, 8.5, 8. Things are calming down. And as the Fed says, hey, we're not going to crush the economy, then then the economy goes back up. The stock market goes up. So a good day, a wild time in America, and a great time to be involved in markets.
Well, it sounds like the Fed's trying to keep their soft landing scenario still on the table. What did I see? They're talking maybe 75 basis points worth of cuts as we get into next year, if I'm looking at that right, Tommy. I mean, what are your thoughts about that in the grand scheme of things? I mean, how soon could we start seeing the Fed cut rates? And also, is that really going to help us out with inflation here? I mean, what's your thoughts?
The market already did that. So that 0.75, the 10-year yield was at 5.05, 5 for easy math. Now it's at, call it 4.20, 4.15. The market's already priced in those 3 cuts. So it's not like, oh, the Fed might cut next year and the rates will go down. The rates went down before the Fed did it. It's kind of a little tricky, but and sometimes markets get ahead of themselves. Like it's kind of like when grains break and you're like, I don't see any rain in the forecast. And then it rains 2 days later. You're like, how did they know that? Well, anyway, the markets got ahead of themselves and already put those rate cuts in. What's it mean for people? It means that the pain that was coming from the interest rates going up is going to ease. We still have inflation. Let me give you an example. We have 3.5%, 4% inflation. That means for every 100 grand someone makes, if they're not getting a $4,000 a year raise, or if you make $50,000 a year, if you're not at least getting a $2,000 raise, then you are going backwards. Now, that's simple math. You and I still know that things like to live, you live in Nashville, incredibly expensive to live in Nashville. Believe it or not, Fargo is becoming expensive to live in. Auto prices have went up. I was in the market for a new vehicle for my wife. That didn't happen. She got new tires, Jess. I mean, I couldn't fathom paying $85,000 or $80,000 for a vehicle. I told her, you're going to love the vehicle you have with new tires. And the tires were expensive. Everything around us is going up. The Fed says it's only going up at 3.5%. I call BS on that because I go to the grocery store. I put tires on a vehicle, but yet they're not going up at such a rapid rate. And think about natural gas. The other day we came in on Monday morning, natural gas was down 14%. Tie that into the American farmer. What do you need to grow a crop? You need fertilizer. Where's a lot of fertilizer derived from? Energies, natural gas, it's all combined in there. So some things around us are coming down. There is some optimism. If you're a farmer, interest rates come down. If you're a farmer, fertilizer is coming down. But the bad part, and this is the part you're going to talk to me about next, the price of the market came down. So you get a break on the left side and you get punched in the right side and you're right back to where you were.
Well, you set me up for my next question. I want to segue this into the grades at oilseeds, Tommy. Soybeans first. Argentina, the news coming out of there, the devaluation of their peso by their new president, Javier Milei. A lot of chatter about this in the market on Wednesday. Was it the main catalyst, do you feel like? Was it more of a reasoning to take some money off the table? I know funds were sellers in the soy complex on Wednesday. I mean, what's your thoughts with the downward pressure overall in the grain trade on Wednesday?
We knew this news last night. The market started to trade it last night. Interesting enough, wheat traded up several pennies last night. So wheat opened lower, traded up. You could have sold all the wheat you wanted up a couple pennies last night. Then look at the close, down 20, 24 cents across the board. The one market that took it and went down the quickest last night was soybean meal. And the funny thing is, it's not funny. Argentina's been out of beans for a while. They ran out of meal. You've seen heads of corporations, major corporations say we are running out of soybean meal in Argentina. We didn't produce any more grain in the world. So because the comments of the new president, it doesn't mean like he doesn't get to say what he says. And then we say corn, bean, and wheat stocks went up 10x in the world. He said it, and maybe it caught a few people off guard. I will also say too that the grain market had recently had a nice bottoming action in both corn, wheat, and beans, and this kind of took the air out of it. So maybe people are caught a little wrong-footed. It's December. We're coming on December 13th to 15th. Most people are done trading in the year. So if you had a long position, you hear news like this, you're disgusted and you sell it out and whatnot. I will tell you this, Jess, watch for bigger exports. I mean, we had China in again this morning. If you're a foreign country and you need grain, if you're a hog producer and you need meal, get over to that meal pit. There's no pits anymore, but pretend there are. Get yourself some meal calls. Get yourself some upside meal, because we're still not done with these weather problems in South America. I'm not saying I'm bullish. I'm just saying if you are someone who needs the product, an ethanol company, anyone who's turning anything into protein, grains are on sale the last 24 hours. Use his verbiage to buy that grain in. Obviously, if you're a producer out there, you're caught long, you have a whole nother problem because you probably own a lot of 23 crop and a lot of 24 crop, and we could talk about that in a little bit.
You made an interesting comment, and it's something we've talked about on the show the last couple of days too, and I'd love your perspective on this. Just the fact that we're getting to the middle of the month of December, and it largely feels like, and traditionally, this is that time of year where a lot of folks get out of the market. They get out early for Christmas, for New Year's. It turns into some of this the algo type trading, and it can be a little more volatile because there's less volume in the markets in grains and oilseeds. But I think to that point, I wonder if people need to reward themselves on any rallies that we see here throughout the grain complex. What do you make of that here as we kind of get into that holiday malaise type of trade, Tommy?
Great question. I got just the answer for you. Number one, last Friday, volatility in the corn market hit 52-week lows. And when you look at the corn market over the last 4 months, it's got a 40-cent band. When you look at the bean market, although it's been volatile, it's within a dollar band. When you look at natural gas now, we're breaking out to the downside, but volatility is coming down. Crude oil volatility is coming down. When volatility comes down, that's people betting that calls won't go up really large in value and that puts won't go up really large in value. And that's how you're getting that VIX. Every market just has a VIX, whether it be the S&P 500. S&P 500 VIX, folks, just made a 3-year low in the last 48 hours. So you're seeing volatility collapse. What it means, and to your point, yes, sir, you are correct. Rallies need to be rewarded. The problem is all the good people who you interview and speak to all day, they just sold $7 corn a few years ago. $4 cash corn. You're in North Dakota right now. There's corn that has a 3 in front of it.
Mm-hmm.
They're insulted by that price, but that is the current price. If you don't like that price, call a different elevator. Might be a difference of a nickel, but that is the price of corn. So when you and I say, yeah, if you see a 10, 15 cent rally in corn, you might want to give them some. Folks are hoping for a $1.50 rally. The volatility in this market says that's not going to happen. Speaking of VIX, let's switch to cattle. Last Friday, when corn volatility made a 52-week low, cattle volatility made a 52-week high as those markets were really ramping up last Thursday, Friday. So a tale of two worlds. You know what happened in the cattle market, just absolutely decimated in price action, and a lot of energy was spent in getting that bull market up, and a lot of energy was spent in getting that bull market down.
Tommy, on that note as well, here thinking about you mentioned this too. Any folks who maybe they're sitting on a long position here, they got a lot of grain left, a lot of 23 grain that they got to think about here. I know in terms of some of these markets you mentioned, cash price basis is going to have to do some of the heavy lifting here. I think at this point, especially in corn, a lot of those bin doors are going to be shut probably till the beginning of the year when it's a new tax year. But on that side, on that note too, maybe some extra bushels could help maybe ease the blow, so to speak, for some folks when they see those prices. I mean, what's your thoughts on that? If folks are sitting on a lot and they haven't done enough marketing yet?
The great question. The clock's ticking. Although you and I are super excited, I'm really excited that interest rates come down. They're not zero, folks. I'm
Yeah.
just saying your operating's not 10, 9%. It's maybe more around the eights. That's still a big number. And so the clock is ticking. Let me repeat, every month you hold that grain, even if the price is going sideways, if you think you're catching that carry, like that pie in the sky, I see the months out further or higher. If you're not selling those higher months, as those higher months come into the current months, it's like the penguins going off the cliff. It seems like corn was 510 out 6 months from now, but then when I sold it, it's 470 again. So if you want to catch the carry, you need to catch it. If you're just overall frustrated at any point, you can sell grain. We still want you to own a little upside because the volatility is low with that. Get in control of 23. If you get in better control of 23, then you could have an intelligent conversation with yourself, because sometimes we lie to ourselves, right? And then you could talk to your risk management broker or whoever you're working with about getting a floor under 24. The floor for 24 I like right now is March short dated puts. You can go to March, you can go to May, but say the March short dated puts around 72 days till those expire. That will get you through Christmas. In the New Year's, it'll get you through the January crop report. And Jess, it'll get you through 3/4 of that month of February. So you can set that floor while we're establishing crop insurance. It's obvious today that we are not going to have a really high price of crop insurance in corn. Things can change and they can change quickly. But with that volatility so low, the market's saying we're probably going to be anywhere from 470 to 510 in these 2024 corn. It would be wonderful if I was wrong and we had a 550 crop insurance level for February. Lose your money on those puts, sell that market higher, get that crop insurance and move on. I'm not so sure that's going to happen, my friend.
Yeah, no, great thoughts there. Things to consider for sure. You mentioned cattle too. I just want to ask you real quick there. All this volatility, do you think we're finally establishing a bottom and new support here as you look at the charts and whatnot in cattle, or do you think we got another leg lower? I know a lot of cattle folks are pretty frustrated right now.
I'd say that there's been a pretty good low established because the price action, the way we spun out of that market Thursday, Friday, Monday, Tuesday, we traded that big volume towards the end of the week. We had 3 up days. We did close down a little bit today. I think with the stock market and everything doing well and what happened with interest rates, I think you'll see a bid to all commodities. As we speak, gold's up a lot. Grains did close lower, but they came back. The cattle market did the damage it needed to do. There are still some bullish fundamentals. Some people really got messed up selling puts, and I'm sure you've had lots of guests talk about that, but there was a group of people. Why they did it is for a different day, but they sold the put because they thought if it ever got there, that's fine. It got there and went way through there, and that created that extra volatility. All margin calls have been met. If someone was caught long and lost a lot of money, they did have to send the money into the CME group, or they were blown out of that position at a horrible level. Once that happens, Jesse, it creates that air pocket where there's not a lot for sale some days. It was very easy to watch cattle go up the other day because all the people put all that pressure on selling it so far low that when the last guy sells the last one lot at the bottom, the market drifts back up. And that's the current state we're in right now.
Tommy, great thoughts as always. Before we let you go, anything final you want to share or reiterate with folks today?
No, thanks. There's a lot of need for education. We've just come through a really great 3 years of commodity trading and markets, and I'm not so sure the next 3 are going to be so easy. Interest rates are coming down. Things will be okay. We got to grow the bushels next year, Jesse. Get ready to be a farmer who's going to grow big bushels and sell them at what will feel like a lower price.
Tommy, I got to give you a plug too, real quick. I know you and the team there at Advanced Trading ATI Pro Media. You are doing something really cool every weekday, live at 9 on YouTube and on social media. Talk about that a little bit.
We're going live at 9 on the Advanced Trading YouTube channel. You were a big inspiration. We're watching you do these shows every day, and we said, could we do our own show? Could we do a nice 9-minute segment live so you get to watch us mess up live? And we're having fun. We do mess up. It's fun. We'll have a heck of a blooper reel. But if we could just give you that little bit of education you need every day, that's a big deal. Starting at the beginning of the year, we'll have premium content. We've got a great group of people we're associated with who are going to try to give you that little 10, 15-minute segment every day of education. I think folks are going to need it, Jess.
Yeah, a lot of great stuff out there. And again, you can see Tommy and his team live at 9 every weekday on the Advanced Trading YouTube channel. Tommy Grisafi, Advanced Trading, ATI Pro Media. Tommy, always great to have a conversation with you, my friend. Have a Merry Christmas if I don't talk to you, and we will have you back on the show soon.
See you, sir.